Spring is right around the corner and the market is heating up. I'm feeling it. I'm sure you're seeing it as well. And it's a great sight to behold, especially after the last 12 to 18 months. The bond market, is in what we are calling a price discovery mode. And you may be wondering, well, what the heck does that mean? If you noticed a couple of weeks ago, rates were starting to trickle down. Finally got underneath that 7% mark. 6% was looking pretty sweet. And then it stalled out and then did a complete reversal. Why? Well, we got some good economic news. And not only that, since then, the market was anticipating that the Fed was going to cut about 6 times this year. Rumors started coming in that it wasn't going to be 6, it was going to be 3. And now, overnight, an article has come out with some news that the economy is actually accelerating. We're seeing some growth. And there is maybe a chance that maybe the Fed won't do anything at all. So that's creating more uncertainty in the market. And when the market is uncertain, then we see the volatility. So the other thing that we are noticing is that while inflation is a driver of interest rates, because inflation drives the bond market up and down, and when the market moves up, then rates move down, and when the market moves down, rates move up. Well, we're in this volatile mode, and inflation generally drives that activity. But what we're seeing is that the fear of this debt service that we have is weighing heavily on the bond market. So while we're seeing some good inflation data that's saying that prices are coming down, or actually inflation's coming down, I don't think prices are coming down, but inflation is coming down, and we're not seeing it in interest rates. And normally they have an absolute direct correlation. And so the only thing that is stopping it is this debt fear that we have of being able to service the debt load and not issuing more debt. So that's weighing heavy on the market. We'll see how things shake out. Hopefully we'll start seeing some 6s again, because I think that does make people feel a little more comfortable. So I wanted to share with you also some of the things I'm talking with buyers about, because I think that's important for you to know what we as lenders are talking about. One of those things is the potential for appraisal gaps. That was a conversation back from 2019, and now we need to start having it again. Why is that? Because with this lack of inventory and buyers actually coming out, we've got a lot of pent up energy that's been sitting on the sidelines. Buyers are now coming back out into the market because they figured out that the rates are here to stay. They're coming back into the market. The inventory is not quite there. So we're going to have another surge of buyers without the pool of inventory, which we all know what that does. It creates multiple offers, it creates bidding wars, and it ultimately drives home prices up. So if home prices are on the beginning stages of that price drive up, then we don't have appraisal data, we don't have the comps to support it. So potentially we could start seeing some gaps. So we need to coach our clients around those gaps, and I'm working with them to show them how they can use their dollars to overcome those gaps so that we don't have to see ourselves in a higher payment or more cash out of pocket. So how do we manage those numbers to keep things in line with what the buyer's expectations are? Another thing that I'm talking to them about is that although rates have not come down, if they want to buy a house, if that is their intention, and they find the house that they love, it may not be their dream home, but it's the house that fits their needs, then they should move on it. They can always look to refinance in the future, although there are no guarantees of where rates will be next year, the year after, or anytime in the future. We can hardly predict what they will be next week. But I know that phrase, that catchy phrase, is so popular of marry the house and date the rate. And while that does hold some merit, it also freaks some people out. And it's not to push people into a home, but it's to help them see that if they are in the mode, they're ready to buy a home, and the only thing that's holding them back is the interest rate, and they can afford it without causing hardship or major constraints, then perhaps they move forward. So those are some of the conversations that I'm having with clients, and would love to partner with you and see what other ways that we can help support our clients, support the market, support our sellers even as we move into the spring season and then into the busy summer season. If you have any questions or feedback, I'd love to hear from you. And until next time, this is the Friday Five.